Morning, everyone. Thank you for taking the time to join our session today. So I'm Grant Arnott. I'm the founder of Power Retail, and I'm going to be your moderator today. And what a great turnout we already have. I'm very flattered, but I do know it's not for me. We're really fortunate today to have the legendary Steve Dennis of Sainsbury Consulting beaming to us after dark in the USA, in Texas, as we discuss a multitude of key retail topics. Steve's a leading global retail influencer, growth and innovation consultant, and a best-selling author, and is eminently qualified to bring you insights into critical retail trends. And I'm looking forward to chatting with Steve shortly. Just before we do that, I just want to address some housekeeping items. So firstly, for full disclosure, this webinar has been marketed as a fireside chat, but there actually is no fire. And so I want to personally apologize for misleading you. I will fire our marketing manager, but the lack of flickering flames shouldn't in any way diminish the conversation ahead. Bathrooms are located somewhere east, west, north, south of you. If you can just hang on for the next 45 minutes, that'd be to your benefit. Keep your mobiles on silent, and remember that we can see everything on your screen due to our software here. So we will know if you're not focused, and we'll send an email to your boss. We'll also save time for Q&A at the end of the webinar, so feel free to pop yours in the questions tab on the right-hand side of the screen, and we'll do our best to answer them at the end of the session. Before we start, I do want to acknowledge our sponsor for today's show also, Click Frenzy, Australia's specialist online shopping event producer. On the back of 16% growth in 2024, Click Frenzy has two great opportunities coming up for retailers to capitalize on the growing demand for online shopping events. The first is the Travel Event Frenzy event next week, and then our Netbuster Mayhem event on May 13th. So spaces are limited, so visit www.clickfrenzy.com.au to find out more. And now let's get on with it. Welcome, Steve.
Well, thank you. Greetings from Dallas, Texas. It's quite windy here, so I'm hoping nothing's going to fly through the window and hit me during the webinar. But I feel like the windows look sturdy, so I think we're okay.
We just had a Cyclone Alfred in some parts of Australia just last week,
Mm.
so yeah, we get you. So hopefully nothing goes crazy there. No tornadoes. All right, Steve. Just want to pose a question to you. It's March 2025, hypothetically, and you're the new boss at a large omni-channel retailer, setting out your three biggest priorities for the next 12 months. What are they going to be?
Well, of course, the best answer to this question is very specific to the situation that a retailer would find themselves in, right? What are the growth trends in their sector? What's their competitive position, any particular challenges. So I try to think about this from the perspective of, I'm going to say generic advice, but things that maybe are more from a leadership perspective as opposed to really specific things to
Great.
do. And one thing I would say is, and I guess, we'll probably get into this a little bit more, but my overall outlook for retail is, I think in most markets, it's not going to be necessarily a terrible year, but I think it can be quite challenging. So if you happen to be a retailer that is in a really strong position, competitively strong, great momentum, strong profitability, good balance sheet, one of the things I would say, it's a really good time to go on offense, because I think we often see leaders take advantage of difficult situations because most of the other folks, if you are more, you know, in a mediocre position or struggling, you tend to be playing defense anyway. But if things look a little uncertain, as I think they do, or a little challenging, as they probably will be, then you're likely to get conservative. So that would be like one general comment I would say about kind of where you sit. Um, but a lot of the other advice I think is really more from a leadership perspective. Is one, I would just be, and I see this as a problem year after year, frankly, is just get radically honest or rigorously honest, I guess, about your situation. Where are you really winning? Where are you not? Where are you vulnerable? Those kinds of things, and really and use as much data and discussion with your senior team about the real situation, because I think denial is the thing that often gets retailers in trouble. Maybe we'll come back on that a little bit when we talk about transformation. The second thing, and I kind of hate to say this, but I often see retailers fail at this, is get even more customer centric. A lot of people talk about being customer centric, but I found most retailers really aren't. So get closer to the customer. That can be everything from really digging into your data and seeing what it tells you. It can be doing customer journey mapping to see where there are pain points that you could really zoom in on, hopefully fairly quickly, or other places to do what I call amplify the wow, really stand out.
Mm.
Or it could just be, going on a listening tour and seeing what customers are saying. Again, I think this is like really obvious advice in a way. I hate to say it, but a lot of retailers don't do it. And then the third one, I guess, I might think about this as kind of have a management style that is both loose and tight at the same time. I think the tight part of it is I really do think, and again, I don't know enough about all the dynamics in the Australian market, but I certainly see in the US and other markets where, inflation is still an issue. We have a lot of political chaos at the moment that's, more unique to the US, but, maybe spreads out to the world. So when you're in an uncertain environment, I think you have to get hyper focused, really batten down the hatches, so to speak, and be very, very careful with expenses. But at the same
Mm.
time, you can't lose sight of the long term. So I think the loose part is, you know, get out there and learn about trends, experiment, start to create that portfolio of growth opportunities, maybe in a small way, but don't lose any trajectory in the pipeline of ideas and new opportunities.
Okay. Yeah, no, that's good generic advice. And I think back to your first point there, I imagine if we look at the Australian market, there's retailers are struggling, and I think some of the ones that I suppose there's probably more on this webinar, frankly, in the latter category of doing it tough.
Mm,
Uh, versus those who are flying with healthy balance sheets and cashed up and so forth. It
yeah,
has been a tough couple of years,
yeah,
down
sure.
to inflation pressures, cost of living, etc. So um, back to your second point around customer experience, how does a business that's perhaps financially challenged and getting you've got this challenge in a business, right, where you've got um, board pressures and CFO pressures on, okay, make every dollar count, um, extract as much margin as you can, versus investment in customer experience for the potential upside, but perhaps harder to quantify the upside of investment at this point in time in customer experience, such as I don't know, free shipping or faster shipping, things that actually cost the
Yeah.
retailer money, just as one example in the short term. What are you seeing businesses look at with regard to how they approach looking at ROI modeling, et cetera, on
Yeah.
customer experience?
Well, one thing that I also think is often lacking is you have to have real clarity about your customer goals and hopefully understand where you have opportunities and gaps. And by that I mean, you should have that by product line, you should have that by different customer types, and you should be looking at things like, are we acquiring enough customers? Are we retaining enough customers? Are we getting the frequency rates we want? What are our net promoter scores or some measure of
Yep.
loyalty? Um, Average basket sizes. So if you have this suite of measures
Right.
and you have a good place to start, then hopefully you can be able to say, well, the reason we're doing this, even if it's not going to pay off in the short term, is we have confidence that it's going to move the dial over the longer term. But you're still going to have a conversation about the emphasis. The other thing that I think it can help you do, which is also just a general strategy, is I sort of joke around. Some of in the audience may know the movie or the play Glengarry Glen Ross when Alec Baldwin talks about ABC always be closing. I say
Mm.
ABT always be testing.
Yep.
The easiest way to try to build an ROI, or not the easiest way, but one of the powerful ways to build ROI is to test your way into things. So if you've got some strategy for customer acquisition, you've got some strategy for improving basket size or whatever it might be, stand up some pilots so you're not spending a ton of money, but you're also making progress. So it's a portfolio approach, but ideally
Mm.
you've got enough clarity about the levers you want to pull that you can be more specific about why you're doing it, as opposed to just saying, oh, customer acquisition is important. We should be spending a bunch of money on customer acquisition. Like, yes, that's a truism, but it doesn't really help you get to specific actions and make some of the trade-offs. But it's just difficult when business is tough to invest appropriately in the long term when you're so worried about the short term. So, I don't want to make it sound like it's an easy challenge, because it's not.
No, I get it. But I think and what I take away from that too is that the data and the setup of the data, you talked about having a suite of metrics and then obviously being able to track those well
Mhm.
to have the sum of all parts approach to getting the
Yeah,
result. So
yeah,
data is key, which probably takes me to my next question. Now, in Australia, it's a law in 2025 that every business webinar must include some reference to AI.
yes.
So we're compliant. Where are we in your view on the AI hype cycle? I know you've got a lot to
Yeah.
say on this.
Yeah, well, we have a joke. So I have a podcast I've been doing for about 4.5 years called the Remarkable Retail Podcast, and the guy I do it with, Mike LeBlanc. We sort of joke around when we're interviewing somebody as to what minute, take a little wager on how many minutes into the interview the guest will first utter AI. Usually it's about 7 or 8 minutes, by the way. So we're about at the same, maybe a little behind. Well, so I guess a couple of things about where we
Always
are.
trying to
I think to me, first of all, just generally, artificial intelligence is going to be maybe the fourth wave of big disruption in the retail industry. The first being digital commerce, the advent of e-commerce, search, back in the 90s. The second being the advent of smart devices, which really, changed connection fundamentally with social media and models that could pair supply and demand, Uber, these kinds of things. And then, around 2018, we got 5G, cloud computing, and just this, and that really like helped machine learning and a lot of other technologies take off. So AI, I think, is this next big wave, particularly generative AI. So I do think it's going to be massively transformative. Our guest this week on the podcast, not to pitch my podcast too much, is Jason Goldberg. And I like what
Yep.
Jason says about AI, which is he believes it's overhyped in the short term, but underhyped in the long term. And I
Mm,
think that's where I would come out. We're definitely seeing, and I'm on some of my consulting clients are seeing some really impressive results from generative AI in particular, whether that's rendering images where they used to have to do real photography, chatbots, automating
content.
rote tasks,
Mm,
personalization, a lot of good progress there, but still relatively modest in
mm,
the scheme of things, and definitely some disillusionment um, with the pace.
mm,
So, um, so I guess I would say a bit overhyped today, but I would not relax at all about discovering its possibilities and testing it and seeing the possibilities. And then I think the next thing, which I'm sure many in the audience are already hearing about, is agentic AI. I think the potential for that technology is pretty considerable, and it's going to change search. It's going to change sales help. It's going to change a lot of things. I think quite quickly, probably more at 26, 27 than
mm.
next 3 or 4 months. But
And
I would
how do
not
you
lose focus.
explain? Sorry, how would you explain agentic AI, Steve? Just for some
So
of
one way to think about it
the.
is really thinking about having, like today, if you think about a chatbot, and I'm sure somebody
Yep.
who's more technically proficient, which isn't hard, is going to hate my explanation. But if you think about the way chatbots work, it's just sort of a back and forth kind of thing. The way I think about it from, you're planning a trip to Italy, and if you had a travel agent or you had a sales
Mm,
associate and you're explaining, I'm going to be there 10 days and I'm going to need, a nice outfit and
mm,
casual outfits on, kind of all the information you
mm.
might give to a person,
A
you can
brief.
give to this intelligent agent who will
Mm,
go out and come back with a set of options. So just
yep.
when you think about, say, the way Google search works
Yep.
today, or search on a company's website. Right now
Mm.
you might say, fleece jackets, because I know Patagonia is working on this, fleece jackets, right? And then you just get a list of all the fleece jackets, and then you sort by price or you sort by brand or what have you. Instead, you do a more natural language sort of thing, like show me all the fleece jackets for between $100 and $150 that will keep me warm enough at night when I'm in Montana mountains, or whatever. So it's just going to be able to automate much more complicated searches. So that's one. I mean, there's many, many other applications, but I think in retail, you can think about it as replacing your best sales associate, or allowing your customers to do a lot more research before they come into the store, for example, or just navigate your website much more efficiently. So harnessing it and getting ahead of it, I think, can be quite powerful. But it's going to involve some rethinking of sales help, customer service help, maybe even the way that your website is constructed.
Yeah, okay. No, that's fascinating. And look, very much aligned, some of the things you were talking about there with where retailers are at in terms of their journey, very much aligned with what we're seeing here. A lot of that usage around workflow optimization, customer
Mm.
service optimization, best described as optimization. But I like what you said, Jason said, around overhyped in the short term, but not for the long term, because I think as AI becomes commoditized and becomes a standard tool for every business, then the differentiator will be down to the strategic use of AI in the future. And yeah, it's going to be an essential part of how we do business going forward. I want to talk about another aspect of retail that's come up a lot in Australia lately, is around retail media networks. There's been a lot of
Mm.
interest in the development of retail media networks, and we're seeing some of the
Sure.
larger, publicly listed companies here starting to go down this path, inspired
Right.
by Amazon and others who are making big money out of that. So in the last 12 months, we're seeing some big growth here, but do you think this is a genuine big opportunity for retailers, or do you also think it might be overhyped?
I would probably say it's appropriately hyped with a caveat. Um, First, there's some powerful reasons for retail media networks to be pursued in general. I think, the ability to get advertising in front of consumers when they're much more in the purchase moment, as opposed to just out, kind of in the wild, wild west of the internet. Um, and marrying data, first party data that a retailer has with other data in that, closer to purchase, point of purchase, I think is pretty powerful. And of course, it allows retailers to monetize their position with brands. So I think the powerful reasons that it makes more sense for advertisers to shift some of their money away. I mean, not only from trade dollars, more in the grocery business, more kind of traditional trade advertising, but there's a lot of digital advertising that's just not all that effective.
Mm-hmm.
Um, and by the way, I would mention there's a guy here in the States named Andrew Lipsman who used to be at eMarketer. He's now off on his own, and he's got a Substack and a lot of just great information. So I would encourage you, if you really want to do a deep dive on
Mm.
retail media networks, much more from a North American perspective, I will caveat it.
Yep.
He's the guy to look at. But having said all that, two things. One is, if you look at what the experience is in the United States, almost 75% of retail media network market share is Amazon.
Mm.
And then the next biggest, and I forget the exact number, is Walmart. And then you drop down to a couple of the big grocery stores and things like that. So it's extremely concentrated
Mm.
among the big, big players that have
Yep.
vast assortments and have a lot of things that, well, Walmart's different than Amazon. Amazon has a lot of advertising from its marketplace
Yep.
companies, not so much from the brands. Walmart is
Right.
much more from the CPG companies and the like.
Yes.
So, there's very few companies that have that kind of of power
Power. Yep.
and assortment to really make it work. It's not a trivial investment to get it right. So for a
Mm.
smaller retailer, I might be a little bit leery of going too far and too fast. Um, and then the other caveat I would say, which I think will become more a topic of conversation here pretty quickly, is there is so much money in it theoretically. Walmart in their last quarter, I think they said that 30% of their operating profit came from their advertising business. Um, Amazon, as much as people say Amazon Web Services are the biggest profit contributor, it's probably
Mm.
true that Amazon ads are the biggest profit contributor. Certainly at the margin they are. So it's
Yes.
massively profitable. But
Mm.
part of the issue is, as companies chase profitability, how does it degrade the customer experience?
Mm.
And that I think will start that tension. I mean, I think you can look right now and see that Amazon's been, kind of totally taken over by advertising. The
Yeah.
Walmart shopping experience is a little better. Of a number of other
Mm.
companies, it's quite a bit better because they've been mindful of measuring the right thing. So it's not just all this
Yeah.
incremental profitability. It's, are the shoppers enjoying our experience? Because,
Mm.
I came to your shop to buy a power drill, not to get pitched, life insurance or something,
Yeah.
so I think that's a caution I would
Mm.
have. And I think right now, because it's still fairly embryonic, but growing quickly, and so many big companies are having success with it. I think as you get to, the 98% of the rest of the world, it's a
Mm.
bit more challenging.
Yeah, no, that's really interesting perspective, um, and I guess it's, you know, retail being your core business, and suddenly you're turning yourself into a media company. There's a lot to grapple with there, but um, in terms of, yeah, balancing that, as you say, the the spam factor effectively of, standing in the way of your customer journey by throwing
Right.
advertising messages at customers for profit versus balancing that. So, yeah, I'm sure there'll be a lot of trial and error over the coming years in terms of establishment of these retail media networks, but very good to know. Other things you talk about, I know in your books, are around the hype cycle with respect to unified commerce. What would you have to say around where we're at in terms of, this has been a much discussed term over the last 5 to 10 years, I would say now. Where are we at on unified commerce?
Well, it's funny. A couple of conferences, or maybe three or four conferences I've been to in the last year, unified commerce gets a lot of discussion, and I keep talking to some of my colleagues, where I would say, well, 2007 called and wants its press release back. When I was the chief strategy officer and head of customer insight at the Neiman Marcus Group, we had unified commerce initiatives. I was responsible for multi-channel integration efforts. Uh, and I have one of my earlier keynotes, which I did 10 or 11 years ago, where I talk about unified commerce, frictionless, blah, blah, blah. So to me, this is a very old idea. So I feel, and I apologize to anybody in the audience who I might offend by this comment. I feel this is a bunch of technology providers needing to repackage omni-channel, needing to repackage, any number of terms that have been thrown around for a basic idea, which is that the customer is the channel, and most customers are active in physical and digital channels. We know that digital influences brick and mortar sales, and brick and mortar experiences influence digital sales. So anybody who has not been trying to create a unified commerce experience by integrating their data and doing cross-channel attribution and these kinds of things is at least a decade behind. So my
Mm.
attitude when I hear this is, you know, you shouldn't be on a conference stage talking about it, because all you're telling everybody is you've been apparently asleep for the last 10 or 15 years. But I realize,
That's
I'm guilty in my own writing of trying to say things that are more clickbaity or whatever, or repackaging old ideas. So, but the fundamental idea of breaking down the silos, um, thinking about your brand as horizontal, and customers, not caring so much about channel. So, anything that gets in the way, I call it harmonized retail, but anything that creates friction in this cross-channel movement, you should try to root out. And then hopefully you'll also find ways to really deliver a differentiated experience, or what I call amplifying the wow. That's important. So unified commerce, I guess, is sort of table stakes to being able to do that. But
Yep.
and clearly there's many companies that still don't have this figured out. I mean, I work with a couple of retailers that are quite behind on this, so I don't want to sound like everybody's figured this out, but I do think it's quite an old idea, and this is just some repackaging.
Yes. Um, so good, Steve. So I appreciate that. What about online marketplaces also in terms of they were the darlings of digital retail over the last 5 years, but I feel like they've hit the skids somewhat, and there's some challenges with third-party online marketplaces. What are you seeing there?
Well, one thing, I touched on this a little bit, so I guess it's somewhat like my comments around retail media networks.
Mm,
These marketplaces, the successful marketplaces that I'm aware of, mostly are the very big players. And one of the things I've talked about for years is, which I think is relevant to this. I'll try to make it quick because watching our time, but what's happened in retail broadly is we've seen this bifurcation where there's a lot of success among kind of the big value retailers, so Amazon, Walmart, warehouse clubs, hypermarkets, these kinds of players, discount mass merchants, but large format stores, kind of everything stores or close to everything
mm,
stores. And that could be by categories too. So Bunnings, I know, a great retailer in Australia, in the home improvement category, but they have everything in that category, or at least that's kind of what they're known for. But then you have, more specialty kinds of stores where part of what makes them successful is they're not for everybody, right? And they're not trying to be everything for everybody. They have a point of view. And I think you almost have to have this everything kind of um, position and have scale to make
mm,
marketplaces work, because people are going there because they expect you to have everything. But if you go to, a great fashion retail, specialty retailer, you're not going there because you think you're going to have everything. You're going there because they have the stuff that you like. And so you've really narrowed the market. So I don't think, it's a long way of saying, I don't think marketplaces are for everybody. I
mm,
think it's easy to convince yourself that, well, it's hard enough to get customers to my website, or it's hard enough to get my customers in the store. If I have something, that I can sell them and leverage that traffic, I should do it. But um, it can be it can be a lot of work to try to
mm,
create that endless aisle experience for lots of retailers. And from a supply chain perspective, of course, you often have to rely on drop shipping or other things, which may not, which, have an area of complexity to them.
mm,
It's nice you don't have to own the inventory. Like, you can convince yourself it's great, but oftentimes the customer experience isn't great. So, your customer places one order, they're getting a box from you, they're getting a box from somebody else a week later. So I just think you have to be very careful. So I would say I'm negative towards marketplaces, except for a handful of retailers. I think for everybody else, I would go quite cautiously.
yeah. Good advice. And there's also, I consider the compliance risk along the lines of what you were just talking about there, not just drop shipping, but when you are effectively handing off your customer experience, but you're still running the store effectively, and you're
Yeah,
responsible for what is sold on your site. There's you know, a substantial risk there around compliance for the products that get sent to
sure.
your customers to consider as well.
Yeah.
So, and I think this is your term, but the retail apocalypse that we all hear about,
Yeah.
where are we at with that? Are we doomed or stuffed, as we might say in Australia, or where's the retail
Well,
apocalypse?
I mean, in some respects, there have been parts of retail around the world where it's been quite apocalyptic. But I got a certain amount of notoriety 7 or 8 years ago when I wrote a Forbes piece where I wrote that physical retail isn't dead, boring retail is. And
Mm,
that led me to, here I have to, my publisher will yell at me if I don't, like, flash my
no,
first
you're
book,
up there.
Remarkable Retail. which is
Yep.
5 years ago. But you know, first of all, and I can't say that I know the statistics for markets outside the United States, but if you look at the U.S., since this narrative started to take hold 6 or 7 years ago, and there's also this venture capital guy, Mark Andreessen, who said, I think about 10 or 12 years ago, said that in the future, all retail will be done online and stores won't exist. It was a smart prediction or a well-crafted prediction in that he didn't give a year when that would be true. But since he said that, physical retail has actually grown. So we're not on a trend for him to be right. So
Mm,
physical retail, sales through physical retail or brick and mortar stores have been positive
mm,
for something like whenever the financial crisis was. So 15 years straight. About
mm,
5,000 stores have been opened every year in the United States. Many of the most successful retailers um, are brick and mortar dominant. The two most valuable retailers on the planet are Louis Vuitton and Apple. I think you could say their physical stores are pretty darn important to their experience. So, and then you've seen a lot of these disruptor brands, that thought they could be online only, actually opening quite a lot of stores. So Warby Parker, some folks might know. I know that they're only in the U.S. and Canada at this point, but Warby Parker, eyewear company. They started online and they're now up to about 275 stores on their way to 800. So
mm,
I don't think there's any evidence that physical retail is fundamentally dead. But what has happened is, I talked about bifurcation before. It's really the middle of the market that is collapsing. If you look at where stores are closing and bankruptcies are, yes, you can find companies that got into trouble because of stupid management mistakes or too much debt or something. But when you really look at where things have been apocalyptic, it's these retailers in the middle, department stores, kind of, old time category killers, where the internet's just really good at
mm,
at having everything in one place, right? It's not so interesting. 40 years ago, it was interesting to go to the mall. It was interesting to go to a department store because they had all the best stuff, right? But now you can get most of that stuff online, or there's lots of
mm.
great specialty stores, or there are lots of more affordable places to go. So
Yes.
that's the issue. So
Mm,
the challenge is not necessarily that to bail on physical retail. Um, you might need to do that. You might need to have smaller stores or fewer stores because as digital grows, you generally do need less space. But I think it's been a big mistake. In fact, one of the smartest things, if you look at Walmart here, they're in a number of countries, but predominantly North America. 4 or 5 years ago, they started investing more heavily in their stores, and that has
mm,
actually served them quite well. So, um, but you do have to, I guess the last thing I'll say about it is one of the things I think people have sometimes missed is if you still think about your store and measure it independent from your overall brand performance, and you just think about the store as a place for people to go and look at stuff and pick it out and take it home with them, then you're misunderstanding the role of the store. The role of the store is the hub of the brand. It's advertising. It's a service center for buy online, pick up in store, return to store. It can be a warehouse facility for shipping. So you really have to think of the brand and your overall strategy holistically. So
mm,
stores are and have been changing, and those that really understood the role of the store for advertising and service and the supply chain, that's where the investments have tended to go. And that's where they've not closed stores in many cases because they realize that if I close stores, actually my e-commerce business gets worse or my supply chain costs go up or my marketing has to go up. So you really have to look at it in a little bit different way than we would have certainly 10 or 15 years ago.
mm. Excellent, Steve. Um, you're a transformation expert, and I want to spend a bit of time talking about transformation. A lot of retailers here are going through transformation right now and frankly struggling to adapt to the endless pace of change. You
Yeah.
start on your transformation journey, and by the time you get to the start line, 5 other things have materialized that you have to also add to your transformation roadmap, is my view.
Yeah.
And you talk a lot about transformation in your book, Leaders Leap. So, what are
Yeah.
some of the key learnings and insights that you could offer for Australian? Oh, yeah, get that up there, Leaders Leap. So, um, we'll put links in for our audience after this. But yeah, some of the key learnings that you can offer for Australian retailers on transformation?
Sure. Well, I think briefly, I mean, one of the reasons why I wrote the book is it's been gnawing at me in a lot of respects for 15 or 20 years. I started my career at a very large retailer that's now essentially out of business. Um, I worked for a while at the Neiman Marcus Group, which was, phenomenally successful, and then it's kind of lost its way over the last 15 years. But we can all point, I'm sure, to retailers that were once phenomenally successful that are either gone completely or have been struggling, closing stores, cutting costs, these kinds of things. And so one of the questions is, how does that happen? But the other thing is, and as I, work with consulting clients or speak to groups, I often will ask them, you know, do you feel if you look at, say, the last 15 or 20 years that the pace of change is accelerating? And almost everybody says yes. And if I say, well, if you had a guess, will there be more change in the next 5 years than there's been in the prior 5 years? And almost everybody agrees. So then I said, well, okay, well, if the world has changed so much and is only going to change more in the future, why have you changed so little? Because it's not that hard. And I know I've visited some Australian retailers, and I can tell, I see the same kinds of phenomena I see in North America, which is many retailers that have really done only incremental things in the face of all this change. So in the book, I call this the curse of the timid transformation. Companies that say, oh, I need to transform. They may even have a chief transformation officer, hire McKinsey or BCG or whatever. Nothing against those guys. But when you look at most efforts, they're quite incremental. And when the
Mm,
world is changing so much, um, that just means you're doomed to falling further and further behind. So some of the things I get into in the book just quickly is I think there is a large, I mentioned this a little bit at the top, there's often a very large denial of reality
mm,
that management teams aren't really looking at both how much relevance they've lost as well as they don't really have any plausible plan to
mm.
address the underlying issues. It's a lot of lipstick on the pig kind of thing. I don't know if that's a popular expression,
It
but
is.
I know
It
it's.
is absolutely.
Um, there's often what I would call ego defects where um, successful, I think particularly with successful people, I've been guilty of this myself, of thinking, oh, what got me here is going to get me there. If I've been super successful, then that set of skills, the particular set of skills I've had are going to serve me well in the future. And actually, what I see, and I would recommend Adam Grant's excellent book on rethinking, is that there's a bias that goes on that causes us not to see how much we have to change and kind of
Mm,
protect, defend the status quo. Um, there's a misunderstanding of risk. So one of the chapters I have in the book I call Safe is Risky. And I think we just often believe that kind of slow and steady will win the race. But that actually turns out to be the riskiest strategy of all. Mark Zuckerberg has said, when the world is changing very quickly, I'm paraphrasing, but the the most risky thing to do is actually not take any risk. Um, but I would say from a strategic standpoint, and some of the advice I give in the book is, and this is something I get into in my first book is, you know, what it takes to succeed today just requires you to deliver much more customer value than was true
mm,
in the past. When customers can basically get anything they want from anywhere in the world, when friction has been reduced. Back 30 years ago, you were in competition with the guy down the street, across the street, down the street, in the mall, whatever. That was the world, and you could win on a great
mm.
location and good customer service and a nice shop and coffee or whatever. But that's rarely true anymore.
That's right.
So just being slightly better than the next best person doesn't get customers to switch to you if you are in fact struggling. So, that's why I say you really need to be remarkable. You really need to distance yourself from the competition and stay that way. So you have to aim higher in the value you deliver. But the other dimension is you have to move much, much faster than you're used to. And usually if you see retailers that are struggling, they're really just doing what I call a slightly better version of mediocre, very incremental, and they're
Mm.
tending to move too quickly. And that just creates this enormous gap. And, it may be very well the case, sadly, that when that gap is formed, you can't close it, either because, the stock market won't, there may be many, your board will never take on that much risk. You can't fund
That's
it. Companies don't want, people don't want to join your company because they think you're a loser. It's like a death spiral. And, I think that's always been true. It's just become way more pronounced in the last bit of time. So anyway, what I do in the book is try to explain what I see as the problem, and hopefully pose some things to think about and do that might allow you to accelerate your journey.
Yeah, that's it's a really tough predicament, isn't it? Where you've effectively got a catch-22. You're damned if you, or you hope you're not damned if you do, but bearing that risk you just mentioned, for boards and stuff to swallow, okay, even if they can see the disruption coming, it's like, I'm not the one who wants to make the leap of faith in changing
Right.
everything we do for transformation, and it's just, as you say, a real barrier. So I think that'd be a fascinating read. We're not going to get into all the detail, but I'm looking forward to reading Leaders Leap, just to get stuck into that, because yeah, it's definitely what a lot of businesses here grapple with.
Hmm.
I know we are starting to get up against the clock, so they couldn't talk to an American speaker without asking something about what's going on over there at the moment, Steve. So in
Yeah.
real time, we're seeing the daily crazy headlines coming out of the US, creating havoc on markets. This morning's one, I think, is that he wants to take over the nuclear plants in the Ukraine, which is
Ukraine. Yeah.
ironic. Maybe start with Chernobyl,
Yeah.
can you give us any insight into what impact the Trump-Musk government, and I say that tongue in cheek, will have on retail?
Yeah. Um, well, it's difficult to say. First of all, I often find like I need to apologize on behalf of my country, so I'm sorry.
You don't need to do
It,
that,
it's
Steve.
you have this intersection. Some of this, I guess, gets a little bit into some of the things I talk about in Leaders Leap, but you have in my estimation, and I think most people who actually understand this, you have very bad policy out there. Tariffs, at least the way the Trump administration thinks about it, I think are demonstrably terrible ideas.
Mm,
At least as to the extent we can understand what he's actually trying to do. Um, the degree and the pace of some of the government disruption, the potential layoffs, the cutting of expenses, regardless of whether you think those are good policy ideas, is very dangerous. I think from a macroeconomic standpoint to you know
I
pull
agree.
back on
Yeah,
a lot of spending and lay
yeah,
off hundreds of thousands of people in short order.
mm,
The deportation or the immigration situation, there's a lot of risk of, again, I have my own opinions about this. I'm not going to share my political
mm,
opinions, but I think, the potential for labor shortages, because there are a lot of undocumented workers that are doing construction
mm,
jobs, picking crops, these kinds of
yeah,
things. And then deficit spending, in terms of the impact on interest rates. So right now it's, very chaotic, very
mm.
uncertain. Um, Trump is very transactional, not relational. So I don't know why, um, I imagine you folks have a sense for this, but why you would pick on Canada, I have no idea. That seems really pretty insane. So I don't know how quickly any of this will become clear. We're
Mm,
already seeing, I mean, obviously the stock market gyrations that, we're seeing around the world. Consumer confidence in the US has dropped precipitously in short order. Just today, the Federal Reserve's predictions for gross domestic product have been cut back, and expectations of
mm. Both of
inflation.
those have real ramifications for retail, clearly.
Right. So that all, I think that all ladders up to lots of pressure,
Mm,
either needing to, some combination of needing to raise prices, or
mm,
absorb margin from whatever the tariff situation ends up
mm.
being.
Right.
Um, Unemployment going up, people fearful of their jobs, likely to
Mm,
pull back on spending. But, it's hard to know how significant it will be. We're already seeing some of it in the data, but, we're, um,
yet
5 or 10% into what the impact would be. So yeah, it's a really difficult environment. I'm on the board of a company, a retail company, and I can tell you they have gotten much more conservative about signing leases, capital expenditures, wage increases, doing a hiring free. There's a lot of that stuff. So that all, that adds up and has the potential to be quite detrimental. And of course, the U.S. is a big country, big exporter, big importer. Those ripple effects will be felt, all around the world to varying degrees.
Yeah, it's space to watch. Look, we are actually out of time now, Steve, but I'll just ask one last question. I'm sure you get asked often what your prediction for the future of retail is, and when someone asks you that, what's the first thing that comes into your head?
The first thing I think is, it gets back a little bit to what I was saying about being rigorously honest. There's a lot of narratives that I hear parroted back from companies about averages. Like, so for example, you look at the US on average, I think our sales increases were up like 3.9%. Well, um, something like 60% of that incremental growth was accounted for by three retailers.
Hmm.
Most of the retailers in the United States had a slight sales increase or sales decrease. Um, Almost all of the incremental growth that's occurring in the United States is happening through digital channels. So, but I still hear too much of this very abstract kind of thinking, but really digging down to your particular situation. And like I said earlier, not just your comp store sales, not just your gross margin performance, but what's going on down at the customer level, because you can see weakness and opportunity by digging into that customer data. So that's I always whether I'm working with a client or I'm doing a workshop or whatever, I always go to, tell me about what's going on with your customer,
Hmm.
but don't just give me the big, our average unit retail went up, like, but give me a peek beneath the hood.
Hmm.
um, and I think that's where a lot of the analysis needs to be directed. And then, you can start to either generate actions or at least hypotheses as to what's going on. Sometimes it's not obvious what's going on, but you go like, oh, I think when we did this change to the website, we shot ourselves in the foot on conversion or something, So customer journey mapping or customer segment cohort purchase occasion kind of analysis. That's where I always, if I had to go one place, that's where I end up going.
All right. Well, look, I want to thank you, Steve. I found that fascinating and very enlightening, and some alignment with a lot of things that are happening here, but also some real insights that I hope our audience gets a lot out of and can put to work, particularly around transformation. We will, for those who are still on board, we will be making this available, and we'll also send some links to where you can purchase some of Steve's books, and recommend you do so. I'm going to certainly read a couple myself. But yeah, Mr. Dennis, thank you for joining us today all the way from
Thanks for
Texas. Really
having me.
appreciate it. And we'll no doubt talk to you again soon. Thanks
All right.
everyone
Well,
for
hope
listening.
everybody has a
And
good rest of their day.
thanks,
Thanks.
Steve.